So using the CFDs on cotton, the same principles apply to market structure on any asset really. So I mean, each one will have its own characteristics in terms of the way it moves and how it respects supply and demand areas and so on. But the general methodology can be applied, and in this case, we've got a market that is trying to break out below last week's lows. So that's going to be pulling in higher time frame traders to the downside, exposing them to a correction. So what I would argue is that we are likely heading, the bias is to head lower. And in that respect, I'm looking all the way down to where did the move originate from. So you've got in the money longs, and the market doesn't let you stay in the money for long. So um, I'm in anticipation of a move into the origin of this move, of the rally. It's broken down. We're in a broken down market. We've come up to retest those highs to rebalance, but now we're displaced out of that range and last week's range. So I would argue that as we come down, we could move up to come lower. So we've got this M formation that fortifies my bias really to come lower and up to come down. So at the moment, that's what I'm looking at. Um, and we've got last month's lows down here. And that's all I really have to say on that for the time being. Um, so that was the break in market structure over here, current market structure. So we tested that. We're testing below it, pulling in higher time frame traders. Yeah, so that's a significant level. And on the upside, we could start drawing our Fibonacci if we're going to presume that that's the end of the move for now. I'm going to try and get that high on the Fibo. So I'd say that's the high really. And this is the low so far. So if we move that to the right, 38.2 looks an attractive area, aligning with these closes and opens. A lot of that bearish impulse has already been mitigated by that move up. So I think we could see a shallow correction to come lower